This morning, most financial markets around the world are facing a third day of losses because of the troubles in Europe.
Joining us with more on that angle, business and economics correspondent Rebecca Jarvis. Becky, good morning. So what are the world markets hoping to hear today from policymakers?
There's really two key themes here. First of all, you have the entire world economy, which is slowing down. That's a component of what policymakers have to address in general, just how to reignite some of the growth. But the second big theme is what happens in the Eurozone, what happens with Greece, but not only what happens with Greece, what happens with Italy, Portugal, Ireland. These are all places in Europe that are pressure points. Of course, we've seen the biggest amount of pressure coming from Greece, and we want to hear that there's some sort of viable solution on the table that both the Greeks as well as the rest of the Eurozone can agree to.
All right, so you've got stocks dropping again yesterday because of Greece's call for a vote on this bailout. What does it mean beyond the markets? Let's talk big picture here.
It is significant, and when you look at the bank exposure here in the United States to what's going on in Europe, it is pretty significant. The Congressional Research Service did a back-of-the-envelope calculation trying to say how exposed are the U.S. banks to Europe right now in their debts. They came up with this figure of $640 billion. That's a lot of money. It is also an estimate, so I should say that it may not necessarily be that exact number, but they're trying to estimate it. And the important characteristic here is that our banks, they are exposed to Europe, but it's the big banks. It's not every bank. It's the 5 biggest banks. Think of it as the banks that got the bailout because of the housing crisis. Well, now those are the same banks that are mostly holding the bag because of Europe.
So then just to be clear, too, what this does to consumers, so because of that exposure, this could affect things like going to get a mortgage for people here at home, and maybe even your 401k. I mean, those are all the things, the ripple effect for us that we feel, right?
Those are all the things, and it sounds familiar because those are all the things that we heard about in 2008 in our own financial crisis. When the big banks face problems, all of a sudden lending gets more of a struggle. On top of that, it's harder to get a loan from a bank. On top of that, it's harder to grow your business. It's also harder on your 401k, as we've seen.
Not that these banks are doing a lot of lending to begin with. I mean, they're still holding on to, there's a lot of money on the sidelines.
There is a lot of money on the sidelines. You could also explain that with, though, a lot of people who are apprehensive about taking out a loan in this kind of economy, too.
Right. CBS's Rebecca Jarvis.